JB here. Hope everyone's doing outstanding Friday, August 8th, 3:32 on this fine afternoon. Talk really quick about the market. Some names I'm looking at go from their SP up nearly 0.75%. Looks like we're going to end solidly in the green. And let's see where we are week to date. Uh, it seems like eons ago that the jobs report and the backward revisions were going to be the start of the next big bear market, the recession we're already in, the recession we're going to be in. Services PMI this week, same thing, same scenario. And the SP is now up 2.5%. So we'll see how this close plays out. 637. Uh, we're close to being at an all-time high close here. Last all-time high close was July 25th. That's on the S&P. The Nasdaq looks like it's gonna be all-time high closes. So impressive stuff, impressive strength. If you try to tune out the noise, and I always try not to like say dismiss everything you hear, see, read, especially in regards to the tariffs and what's going on, geopolitical concerns, the U.S. dollar, treasuries, like all that stuff. It seems like it's always been the case that it's a lot easier to get folks to click on articles that are fear-based, right? They're gonna create fear. Oh my gosh, like nobody ever nobody ever clicks the article that says the market's gonna climb meticulously higher for the next 10 years, slow and steady, and then no one's gonna click that. But if you say, oh, protect your investments, big crash coming, you probably even just click it just because it piqued your interest. So we'll see how this weekend plays out, and then into next week. Not much in a way in regards to earnings. Some of the new IPOs, I think Circle, CoreWeave may report, and then John Deere, some other names, and then we get some data, right? And the big issue now with the big lag between the Fed meetings, next Fed meetings not till mid-September, is we're gonna have 2 rounds of data. So what is the PPI? I think it's PPI and CPI. It's gonna be interesting, right? And if we get bigger, I guess a lot more hotter, or it's a little bit hotter than expectations. I mean, that might be the trigger point, right? Also, I think a week and a half or two. No, Matt, maybe it's 2 weeks. 2 weeks from maybe today is Jackson Hole, right? So you would have to think Fed chair. This is like his sayonara, his last goodbye. He's going to ride off into the sunset on his little horse, Mr. Jerome Powell. But yeah, this is the last term, right? So next May he's done. So this is the last Jackson Hole. What's he going to do? Is he going to lay out a little more dovish tone, or dovish course? So that'll all be interesting. But needless to say, all right. So that's kind of the overall market. 636. We're right at 636.81 on the SPY. 618 to 618. Thankfully, didn't play out. And then if you look at the run to this week, right? I'm just impressive. So even if you just start on Friday, the SPY hit 619, and then it was higher highs and higher lows. The highs was 626, then 631, 632. 633 on Wednesday, 636 on Thursday, and 637 on Friday. So that's healthy, right? Outside of consolidating in a tight range for a couple of days, to see an upward move like that, and then the lows to be held, not closing below the previous day's lows or hitting the previous day's lows, that's an uptrend, right? So we'll have to see. You always have to worry about some shenanigans or some kind of blindside catalyst or event that comes, that hopefully not, and the markets can continue next week. Get back over 640 on the SPY. That'd be nice. All right, so that's overall markets. Just quick on individual names. In Apple, the one that got away, I played it back in start of July in regards to the AI, right? There was rumors they were going to outsource their AI. I forget who it was. But that's the issue with Apple, right? The AI side of it. It seems like if there's all these other companies are light years ahead of them, and Apple's just trying to do it like they've always known how to do it, using their own people. So I thought that was going to be the next catalyst, right? The next kick in the butt. Little did I know $100 billion investment in the U.S. was the next catalyst. To me, it was like Apple just needed a kick, right? So I guess what that does is alleviates tariff concerns. So all the back and forth rhetoric around China, slapping 145% tariffs, and you're like, oh well, iPhones, and then like, oh no, we'll build the iPhones in India, and then it's like, oh, we're gonna slap 50% tariffs on India, so it's like, oh, iPhones. So I guess this investment's going to exempt them. And I talked about it yesterday on the rant. I think it was yesterday and the day before. The big words now around tariffs. It's not even about the tariffs anymore. It's exceptions and exemptions, and it's what products are exempt, what things are, what exceptions are there. So, there's like a lot of like moving parts, and it's funny. So I saw someone there like interviewing like the Commerce Secretary or Bessent, one of those people, and they're asking like triggering questions like, who pays for the tariffs, the US consumer, right? So when a product comes in and it's at the counter and the consumer writes a check, does that mean that the consumer pays the tariff? And it's like technically they do, right? Because if the product's $100 that's exported, right? Let's say it's $100 Barbie doll, right? And then the exporter goes to the importer pays that $100, so it's $125. And then let's say the importer says, I'm just going to keep the price. I'm going to unchange it for the consumer. And normally it sells for $200. I'm just going to sell for $200. I'll eat the $25. And then the consumer writes a check for $200. Technically speaking, they paid the 25% tariff, right? So, I mean, that's like a roundabout way of saying, oh, consumer paid the tariffs. Yeah, they did, but did they see the cost increase, right? So that's where it's like they want to make it seem like the consumers getting the 100% of the weight of the tariffs are coming on the consumer. And maybe at some point, right, if prices go up because of that, people raise prices, demand goes down. So, folks have to raise prices. But the other side, then that would mean supply would go up, right? So then prices should come down. So rants for other days. But anyway, Apple, good stuff over 200-day moving average. Missed that one. There'll be others, right? And it's funny. The other Mag 7s are doing well today, like Google back over 200, Amazon, which I want to play for a move. That one's back to its earnings levels. So all good stuff. All right. So now just individual names that I've added. CGC. This is like one of those original names I've traded over the years, especially when Tilray kind of caught fire and ran up to $200. It's a pot play, right? And I hate to call it should be a cannabis play. There's a lot of different catalysts that should have played out over the years that should have rallied this sector. And it seems like every time you think, okay, this is it, this is the start, they just go back to where they were. It's like someone hits the reset button. And they report earnings this morning, and like nothing crazy, right? I think they beat on revenues, but they had margin issues. But all things considered, it's like I remember someone asked me back in the fall about Boston Beer. Boston Beer used to be one of my stocks. I was a big fan of it. It used to be like $60, ran up to 500 or 600, maybe higher than that. And I liked it because it's like folks they drink beer, right? I mean and then they've been coming out with new brands and new variations. Then you had the sparkling seltzer and the cider and all that stuff. So that was a while ago, but now as the years go on, I think there's the culture has shifted a little bit, especially now you have the new HHS, Mr. RFK. He's is there's like a switch a little bit in the culture, and even you see even with last couple of years too in regards to the alcohol side. So now it went from from the beers, the IPAs, and all that to like it's almost like people are shying away from that stuff and are moving to there's a huge article in the Wall Street Journal. Maybe it was a couple, not huge. Maybe it was like 3 or 4 weeks ago about mocktails, right? And you go into a restaurant or they go to the bar and they'll do fancy mocktails and they're $30. Right? And they have no alcohol in them, but they do mushroom infused vodka and all this other stuff. So because of that, I think there's an opportunity to take, and you've seen Boston Beer. Someone asked me, are you still bullish Boston Beer? I'm like, I love the name. I love the company. They've done a lot of good things for small businesses and things like that. But just because you like what they do doesn't mean it makes a good sound investment but I think there's, the culture around the alcohol side is shifting a little bit. And I think that opens the door, especially because, with the cannabis legalizing, some of those things makes it, I guess, take away from that. And I remember I used to argue with people on Boston Beer. I would be uber bullish and like, well, people smoke weed too. They, that's going up. I'm like, now, I think so, and I think, I'm not saying it's taking that market share, but I think there's an opportunity. So, at some point these take off. Last time I traded CGC and ACB, I'm many multi-bags. So I got to go back. Was that 2023? I don't even have my chart up here. I'm not saying deja vu is going to come here, but I'm looking. Oh, it was mid last year. Yeah, ran from 2 all the way up to $10. So, I'm not saying deja vu is going to happen here, but small risk, plenty of time. October strikes, inexpensive risk reward basis, and you say, oh well, JB, why don't you buy the stock? It's because if you can get a contract for 15 cents for $2 and the stock goes to $5, you're talking a couple thousand%. Use that same capital to buy the stock at $1.3026, whatever, and it goes to $5. Risk rewards totally skewed, right? You make 300% or whatever, but you're risking the same capital for substantially less return and small, right? I'm not buying insane amount. All right, so that's CGC. Hopefully I'll have more due diligence on the watch list come Monday, and hopefully it takes off. And I talk about having like a post-traumatic stress disorder on names, because sometimes it's almost worse to have a name in your portfolio that you're staring at that's bidless that you have to wait for it to expire. And that's sometimes why I shy away from getting speculative names that are further out of money, because then it's almost like a form of torture that you have to sit and watch it every day, do nothing, right? And there's some that have come back to life. I bring up the story open table buyout back in the day. And open, by the way, open OPEN, the ticker used to be open table, which got bought out by Priceline. And I had the calls. The calls were bidless, and I was staring at them, and then they got bought out, and those calls went up like $35 or whatever. But just goes to show you, like, sometimes those bidless ones play out, and sometimes if the calls went up to like 50 cents or a dollar, I probably would have missed the big run because I would have sold them. And here's a SPY. Hopefully, it can hold up into the close. All right, so that's CGC. Lemonade, disappointing yesterday. Thankfully, closed my calls out flat. Great day, great week on the 50. Do I have to? Yeah, the 50s. And then I was looking for other opportunities to play for upside, and you start looking at 55s for next week. Even with the move today, it was up 6% earlier. They were red, so I'll probably wait till next week. Good sign though; it shook off yesterday's move. Definitely a name I'll revisit because it's similar. Like, it stayed in the 30s and 40s, and then if it can stay in these areas, you have to think these people are short much lower. If you don't remember, Lemonade was $18 last year at the end of last year. So like, some of these shorts might be in. I mean, they could have shorted it during COVID, right, when it's $100, $200, whatever Lemonade was, or they short a heck of a lot lower, and now you have a situation where they got to make decisions. All right, that's that. Joby, I'm not saying I'm not going to talk about Joby anymore, but it's, I hope it runs up to 20 next week or in the coming weeks. But I just have a couple of the October 20s. I'm just going to continue to hold those, and then maybe if it gets down, it hit 16 today. At the same token, I'm like, even hit 16, where is it going to go to 20, 21? So I don't know if the risk rewards as good on the upside as it used to be. So if that's the case, then I'll kind of sit on the sidelines for now and just hold the October strikes. If it does break it back over 20, I'll look to probably close those out and revisit. Serve, just disappointing. Great spike out of the gate. I thought, okay, here we go, squeeze. We're gonna squeeze the shorts, 25 plus short interest, all the way up over 11, and then it gave it back, and it's been chopping around here. I'm still bullish to name. I'm just disappointing. I was posting in the chat room last night. It's like the shorts were shorting the stock before any earnings release came out. It's like they knew, okay, this is a low liquid stock that with a high short interest we have a big position in. Let's try and create the market, right? And they just sell it, and then they like bid whack it, and then it becomes one of those things where people, oh, it's earnings, there must be a miss, and they sell and sell, and boom, and they took it all the way down to eight something. And I'm like, I wish you're there to trade. Anyway, still love the story. I'll talk more about that later. Sets to serve, and then just some other names. And I'm looking at Lulu here too, but United Healthcare finally pulled the trigger. I made this little chart here, and if it doesn't work out this into next week, I'll probably add some more calls at some other point, because at some point there's going to be, whether there'll be some insider buys, a stake, an activist stake, upgrades, something, right? Because there's too much value there, in my opinion. So, and to me, like, Boeing deserved a lot of what happened with them. United Healthcare, it's like, I don't know. So when got those strikes, hoping for some more coverage over the weekend, right? It almost seems like it's like a Wall Street bets name, and there's so many people. I wrote that little chart. It's like, I hope people haven't lost their fingers on the way down, because I think at some point, if you have any fingers left, there's going to be a bounce opportunity. So I got those strikes into next week. And then, Lulu's another name, right? Just destroyed since February. Is it tariffs? Is it, was it earnings? And you know what? Their last earnings weren't that bad. And I don't know if this is just one of those names that's been so overvalued for so long. People like, yoga pants, how's this, trade at $50? And then how's it trade at 100? Then boom, it's a, $400 stock. How's it trade at $400? And I remember I used to really like them back I never traded it, but I could never wrap my head too much around the Lulu store, because they bought the mirror. If you remember, it was like a mirror that leans up against the wall for exercise, and that's when I was very uber bullish Peloton. And I'm like, oh my gosh, what are they doing? Sometimes when you're a shareholder or investor, you're buying a stock for what they do, right? Make niche great clothing that is very popular, right? And then they go outside the box and start acquiring things that are like out of their wheelhouse, And I used to be like, oh, that's the straw that broke the camel's back. And then sure enough, it wasn't. But it's so destroyed here. I mean, I hate to try and time bottoms or just play bounces, right? I'm more of like a growth name, momentum, undervalued things like that. But I mean, this one screams at some point, and it's not pinching yet. If it was pinching, I would have got the calls before. 205s look so interesting. I'm trying so hard to sit on my hands because otherwise I'd add them. But they looked interesting before. And I was watching yesterday too, and the 205, 210s looked interesting, but now the 210s are the same price as the 205s, So maybe Monday the 200s will be the same price as 205s, and maybe that'll be the time I get in. But don't be surprised I had some Lulu calls. Like that name, TTD, thankfully I didn't add any calls, right? Just absolutely pummeled, destroyed. And it's one of those names, like you almost have to wait for the dust to settle because it's sold off so much. And you look at the earnings, you're like, what the heck? But I don't know if it's the CFO. So if you don't know, back in February, the reason the stock tanked is because they had ratcheted up their expectations going into this year. That the investment community was like, oh great, TTD's phenomenal, and then they come out with their earnings and guidance and was like miserable. And you're like, what is the disconnect? And then you see the big bounce back in May, and then obviously the addition to the S&P. So made some nice bank on those calls, and then thankfully I was looking to get some, and thankfully I passed. But you have to think the CFO leaving, maybe it opens some questioning around their financials, or at least their guidance. How solid is that? So maybe that's it. So for me, at some point maybe I'll revisit, because obviously the underlying business is strong. It's just all right. So that's TDD, and then last but not least, VKTX here. All the way up to 38 bucks, highest it's seen since January, over its 200-day moving average, first time since November. And my August calls for next week are flat as a pancake, right? Go riddle me that. But here's the thing, and it doesn't even matter because pending, them going completely bonkers, I'm going to hold them into earnings for possibility of data before Friday. So I think as we get closer, I was looking earlier, I'm like, tough to pull the trigger on some of these. I mean, the September calls are, they're up 25%, $4 pretty much you have to pay for the September 50s. And, hopefully they add higher strikes and can do a little more speculative in nature, because that's the point of it. Like if the data is good, it's going to be speculative, but I might have to like nibble some out of the money closer strikes on a weekly basis. Like it seems like a lot of folks are doing. So, but anyway, nice article. Another article in the Wall Street Journal today talking about oral GLP-1. So, all right, folks, have a great day. I'll be back rock and roll.